Good morning, everybody. This is Tony Butler with Insurance Agency Marketing Services. I want to first start off by apologizing for the delay in our start. We were having some technical issues that I think that we've got solved. So again, my apologies for having you guys wait as long as you did. I have Kip Walker on the line, who is with Mutual Trust Life, and we're going to be talking about the infinite banking concept. This is one of our most popular webinars that we do. So I know we've got a lot of people that registered, and it looks like a lot of people are in attendance. So let me get started. I want to kind of quickly brush through some of the things that we do here at Insurance Agency Marketing Services and allow Kip the time that he needs to talk about their products and the infinite banking concept. So with that, let's get started. I'm sure for those of you that have worked with IAMS and those of you have not, we do have a new producers builders bonus that we provide our new producers with perks, if you will, for the business that is submitted. As you see here on the screen, there are different levels in terms of the business that you do submit. We do provide extra perks for you, and that can be anywhere from mailing pieces up to assistance with advertising to grow your business. So if you have any questions regarding our new producers builders, please do not hesitate to reach out to us. Any of the sales directors will be able to help you with that. We also have our IAMS Business Builders, which is our referral bonus program for our advisors. If you do refer an advisor to IAMS and they get appointed with any of the carriers that we work with, we do provide you with a $50 one-time referral bonus. Any subsequent business that is submitted, we do provide you with spiffs on that as well, depending on the type of business that is submitted. Again, any questions regarding our business builders, any one of our sales directors would be more than happy to answer your questions that you might have. We also offer back office support for our advisors. So that's everything from helping with case designs to providing forms, providing status on any of the business that you submit, as well as paperless contracting. We like to say that we want you to work smarter, not harder. So our website is a 24/7 website, and currently with COVID-19, a lot of agents have expressed the pains, if you will, of not getting in front of clients, and electronic applications is a way to go with that, and that's going to be something that you'll be dealing with as business continues to move forward, even once you are able to get in front of clients. So we do have electronic applications available via our website through a couple of platforms. One of the platforms is IGO eApp Solutions. Within our website, we do also offer quoting tools for life producing agents, where you can do term quote comparisons as well as universal life quote comparisons. Forms can be accessed on our website. A lot of sales tools are available as well. Our second platform, as far as electronic applications go, is with Firelight. Now you can access that platform through our website. If you haven't gotten registered, you can go to our website to get registered. As you see here, these are the carriers that are available through our Firelight platform, and we have some carriers that will be available in the near future. We also offer creative marketing solutions, whether it's turnkey agency or digital solutions. So if you need help as far as professionally written handouts or flyers, you're looking for business cards, you want to get into the digital marketing space, we can help with that. I would say if you wanted to take a deep dive into your business and see what we can do to help, we can always do a marketing analysis with you. Please reach out to your sales director. I'd be more than happy to set up a time to go over that with you. We have a retirement analyzer that's available for our advisors, which helps you help your clients in regards to answering certain questions like, can I continue my present standard of living into my retirement years? How would it affect my family if I were to die prematurely? I have a lot of agents that utilize the retirement analyzer, and it is free for qualifying agents. We do offer it on a 30-day trial basis if you haven't used it. I would say contact your sales director, get you set up on that, walk you through how to utilize that. And for your higher net worth clients, our IAMS Wealth Management team is there to help you. They've definitely helped a lot of our advisors increase their revenue, improve client retention, and strengthen client relationships. Charles Jr. and his team are doing a great job of being there for you to help you with those clients and, of course, build your business as well. The Life and Annuity Academy, of course, COVID or the current pandemic has not allowed us to do a Life and Annuity Academy, I want to say, for at least a year and a half, if I'm not mistaken. But as we have found out recently, we will be doing one here in the fall. If you're interested in the two-day training, as you see here, some of the things that are included in that, I do have a polling question. Definitely respond to that so we can get additional information out to you. If you're looking to grow your business, even if your business is growing and you're looking for additional sales ideas, this is definitely something that you would want to attend. Here's the polling question. I'm going to go ahead and launch that. If you could respond to that, definitely get some more information out to you. I'll leave this up for just a little bit. Okay, looks like, well, got a few more people responding. All right, go ahead and close that out. And lastly, we do have our Top Producer Summit that's coming up here in 2022. It's a cruise getaway for our top producing agents. Qualification periods are from December 1st of 2020 all the way up until June 30th of 2022. As you see, some of the locations that we'll be going to on that, the details are available on our website. If you have been writing business and you want to know where you stand, we can provide you with that information as far as the points that you have accumulated. As you see, it's 4.5 million points to qualify, but we can definitely answer any questions that you have for that, what the qualifications are, things of that nature. So with that, sorry for rushing through this, but I want to make sure that I give Kip enough time to go over what he needs to go over. Kip, are you still there?
Yes, I am, Tony.
Okay. Let me switch this over to you.
Appreciate you guys having me today. IAMS and Tony, as always. It's always awesome to work with you guys. You have a fantastic program, and appreciate everybody taking time to learn about this powerful concept today. I can get my slideshow moving. There we go. I encourage you to take notes, write down any questions. If you have some clients that are coming up on your calendar, your book of business, coming up in some meetings that might be appealing for this concept, I encourage you to write those names down and give us a call, because we can use that as a basis for moving forward. The best way to learn a new concept is to write a case. We'll take a look at the infinite banking concept, a little bit of the history and who our clients are, and talk about how other ways we support infinite banking. A little bit about mutual trust. We've been around for a very long time, since 1904, and we are a participating mutual whole life company. In 2016, we merged with another mutual company called Pan American Life. So we went from a small company to a medium-sized company, and a lot of great things happened during that time. We relaunched our products with some enhanced dividends and some other revamped products, and grew by 16% or about 15% every year after that, compounded annually. So we got a lot of good stuff going on. That's in a market growing by 1%. So definitely have a lot of good stories to tell, a lot of new ideas, and of course COVID hit, so that kind of hampered that a little bit, but we're still doing very well. thank goodness. So we are a $6 billion company, $6 billion in assets, $1 billion in capital and surplus. So, and A-rated by AM Best and Fitch. So we are definitely a company that is a strong mid-sized carrier and paid dividends for over 100 years straight. So excellent track record there. We're not going anywhere. A little bit about underwriting. We changed our underwriting to accommodate the new reality there we had for a little while, and a year and a half. But we still have this underwriting program in existence. It's called Telemed Underwriting, and it basically says that your clients don't have to go through a paramed meeting and get fluids drawn and all that stuff. If the client is 18 to 50 and the underwriting risk amount is $1 million or less, which covers most of our clients, need to be standard risk or better, then you qualify for this program. We also have a DocuSign signature program right now, and in August or September, we will be launching a true e-app. So right now our DocuSign program works really well, but we have true e-app and then followed by e-delivery coming in August and September. So a lot of great changes happening. It's not how much money you make, but how much money you keep, how hard it works for you, and how many generations you keep it. That's Robert Kiyosaki. I like that quote because it really encapsulates the concept not only of infinite banking, but mutual trust life. We really focus on the living benefits of life insurance. We like to say that whole life insurance isn't just about death. It's about life as well, and that is what we focus on. What does J.C. Penney, Walt Disney, Ray Kroc, and Doris Christopher have in common? So they all use their life insurance policies, cash value, to help finance their business. J.C. Penney used it to meet payroll during the Great Depression. Walt Disney used it to start Disney World or Disneyland. I always mix those up. But he had tapped out his creditors. Nobody wanted to lend him any money, and he used his whole life cash value, life insurance, to start Disneyland. Doris Christopher started Pampered Chef out of her garage with a cash value from her life insurance policy. So this isn't a new concept. We're just bringing it to a broader market. And the infinite banking concept was really made popular by Nelson Nash and his book that he wrote. And we lost Nelson last year, but we've worked with Nelson for over 15 years, I think, 10, 15 years. So great guy. I got a picture with him, so I was very happy to do that, and really did a lot for this powerful principle and bringing it to a lot of people. And so we just naturally fit with this concept, and he really thought that whole life and MTL in particular had a good product for this type of concept, and we'll talk a little bit more about why that is in a minute. So the infinite banking concept is a financial principle based on U.S. tax laws and insurance contractual guarantees. What does that mean? There's a lot in there. But those principles, just keep this in mind as I'm going through. I'm going to say a lot of words, but really the infinite banking concept provides an efficient way to store money and use it and help it to keep growing. All right. You can use it, it keeps growing, and it grows tax-free. So just keep that in mind. I'm going to say a lot of stuff, but that's the crux. And there's a lot of power behind those words. But a lot of people get bogged down in the details and in the weeds. And we have a little solution at the end that I can share with you that maybe you could take advantage of to help clear those weeds. So the infinite banking concept provides access to capital, and that is really a key to financial prosperity, and that's true whether you're an individual or a business. So in many cases, clients have a savings account or something. Where are they keeping that pool of capital? Where are they keeping it? So in the place they're keeping it, is it liquid? Can they get to it when they need it? Is it guaranteed? Will it be there when they need to get to it? Is it taxable? That speaks for itself. Is it leveraged? Meaning, is it doing anything else for them, providing any additional benefits? Will it still grow if they use it? And that goes to the strategy of infinite banking more than a product of infinite banking. So we'll explain that a little bit. So in most cases, clients are leaving those funds in CDs, money market accounts, cash, spending efficiencies, I don't know what that is. It's just another way to say saving money. But these all have limits. CDs provide a rate of return. We're all struggling to find rates of return in this market. CDs are no different. They do sometimes, they always have surrenders, schedules and things like that. Savings accounts, they'll provide some rate of return for you, but it's very small, and then you get a little 1099 at the end of the year and takes half of whatever you saved up in interest. So, and it's not providing any additional benefits. And you put the money in, and you don't get anything else out of it. So we need to keep this money moving. We need to get it moving and working for us, and still allowing it to grow. And so we think a better solution is participating whole life insurance. So these clients, as I said, they want guarantees. And the product that we use for infinite banking is called a Horizon Value. And it provides 4% growth as a gross rate, 4% gross interest guaranteed, and dividends on top of that. Now, a lot of insurance carriers will quote an interest rate, but that's only half the equation, because 4% times 0 is still 0. The other part of the equation is how you actually schedule the growth of the cash value. And in other products, like all the products out there, IUL, UL, GUL, term, all those have a place. But the reason that whole life insurance is so good for the infinite banking concept is you have cash value in the year one. You have it right there, and you can access it, and no surrender charges and no delays in loans, especially when it comes to mutual trust. We have no delays in loans. So we can design these policies to have, 60+% of the premium showing in cash value and available for a loan right away. I say 60%. 60% is like the baseline. So you have a typical infinite banking concept design would be 60% paid up additions. If you're familiar with that, it's kind of like the cash account of an IUL, but actually it's bundled, so it maintains the whole life guaranteed structure, where it's 60% of the premium going into the cash value and providing a little bit of death benefit. It earns 4% guaranteed plus dividends. It's a participating rider, so it just keeps building from there. And then 40% of the premium would be typically base. So if you have a $10,000 premium, that's $6,000 going to the PUA rider, $4,000 going to the base, and that's you can build that without much trouble, and it's a non-MEC and it's max funded. But we can get more exotic and add term riders on there. We can push that cash value up even higher, 60, 70, 80%, even higher. But in any event, the key is that we have the ability to show that cash value early on, right away, so the client can start using it immediately. And so the Horizon Value, again, is the product that we use for that. So it continues to grow. The cash value never goes down. And so they have the liquidity, they have the access, and they have the control of those funds. I mentioned that our interest rate that we pay is 4% gross plus dividends. Our loan rate is 4.76. So they can access those funds through loans and have the money still continue to grow. And we'll talk a little bit more about that strategy in a moment. It's a key part of infinite banking. So we have a solution, and we'll talk a little bit more about the solution, but we have a solution. What is the problem? So business owners need access to capital. Everybody needs access to capital at times. How do they deal with their debt? How do they own their debt and help grow it? Or not grow their debt, but how do they still grow and maintain their debt? How do they deal with the limits of qualified plans? Qualified plans are good. You contribute funds to your 401k, and what do you do? You don't pay taxes on it yet, not yet. But what happens down the road when you take the funds out? Are taxes really going to be lower when you take them out in retirement? We're $30 trillion in debt now, and it's ticking higher. They got to pay for that somehow. So our tax is really going to be lower when you retire. And that's the only way you really win with a qualified plan. Because if you take the money out when taxes are higher, you didn't really gain anything, because the government's along for the ride, right? They're taking their cut once you access those funds. So how do we deal with that? Keeping more of what you make. How do we prevent the loss of money that we are paying away from ourselves unknowingly and unnecessarily? There's money that we are losing that we should not be losing, and we can, you can find that money and redirect it. How do we cope with emergencies? The banks love to give us money when we need it most, right? No, not really. They want to, they'll give you money when you have money. So how do we put ourselves in a position of power so that we can gain access to those funds, but still have it grow, even though we're accessing those funds and providing for our future and our retirement? So what is the biggest financial problem facing America? It's how am I going to save for retirement, and in many cases, how am I going to send my kids to college too? How am I going to help them with that? It's a huge issue, and especially the college planning issue is big, because that's much more immediate in many cases. Many times families come up on college and they haven't planned for it. What am I going to do now? My kid's going to college, and I have some money saved, but there's a lot more to it than just that. I have a daughter going to college next year, so I know exactly what that feels like. So one of the biggest drains on individuals achieving their goals is the amount of tax or interest that we're paying. We're just paying a ton of interest. About 34% of every dollar that we spend is going toward interest, whether it's your cars that you buy, your home, some living expenses, and by that time taxes take the rest, and you live on part of it, and then you got like 5% to save. And so they don't clients don't want to hear I want to help you save more money. They're already doing the best they can. Instead, what we're doing is saying, let's find money that you're spending away unknowingly and unnecessarily and redirect it. And so we go back to the 401k. Is it really advantageous to overfund the match, beyond the match on your 401k? Let's maybe redirect those funds. Are the deductibles on your insurance, are they too low? Maybe we could raise them up, free up some money there. Are you aggressively paying down your mortgage? Your home value is going to go up or down regardless of how aggressively you pay your mortgage. Maybe we don't want to do that. Maybe a wiser use of those funds is to redirect that money into the infinite banking concept strategy. And you could pay off your mortgage, and if the housing market crashes again, are you going to be able to get all that money back out? That can be an issue. Just getting a home equity loan can be an issue these days. They're very stringent, and I know I've been through this on refinancing and buying another house and things like that. So it's do you want to have to deal with all of that just to get access to capital? So the interest that we are spending is insane. And really, when you look at the volume of interest, it really brings it home. I mean, looking at your mortgage, most of the money that you spend every month on your mortgage in the beginning is interest, and it's just structured that way, so that the bank's taking home $1,200 payment, and they're taking home $1,000, and you paid off $200 or $100 on your mortgage. It's really it's crazy. So that volume of interest that we are paying away, is there a way to recoup some of that? And if you take a look over 20 years, $300,000 in interest being paid away from you, that could be serious money. Even if we recoup a third of that, right, $100,000, for a lot of people, that could be a game changer. So we're talking about, again, recouping some of the money that you're losing, preventing the losses as opposed to chasing the gain. I can get you 1% more in return on your investment. I can get you 2% more. How much more risk can I introduce into your portfolio before you hate me? That's the story they're hearing, and we're telling a different story. All of those other investments are critical. They're very important. It's just that laying whole life down as the foundation of your financial plan makes it all work better and ensures that what you want to happen will happen, even if you're not around to see it happen. So when it comes to the strategy that I mentioned earlier, using your money but still allowing it to grow, that's really the strategy of collateralization. So we're financing all of our purchases, whether we withdraw money out of a savings account that's earning interest, or we take a loan from a financial institution and pay them interest. And so if you, for example, if you had a savings account in a fantasy world sometime in the future, that's paying 5%. And you have a pool capital sitting in there. You have $10,000 sitting in that savings account earning 5%. And then you have the other guy who wants to just take a loan. He doesn't have the money. He wants to take a loan for $10,000. And the finance charge to pay that loan is 5%. If those two strategies are put on the same time schedule, say 5 years, the individual who is taking the loan will pay 5% interest. The individual who is withdrawing from the savings account will lose 5% interest. And if you factor in that compounding portion of the money, they're both going to spend the exact same amount over 5 years. It's just that the individual who was had the savings account is losing the 5% interest that they would have earned. So really the better strategy is to collateralize. You collateralize the funds that are in your account. Now you say, well, I could collateralize the savings account. Yes, you could. You could with a bank, and they could put a lien on your savings, but they're still going to look at your credit. It's still going to show up on a credit report. They're still going to have the power to recall the loan. You still have to go through all of the regular rigmarole that you have to go through to have them record the lien on your cash value. And so it may be an option, but what really puts you in a better position is to build that cash value up in whole life insurance, participating whole life insurance. And if you know anything about banks, they keep a lot of their tier one capital in whole life insurance. So if the banks are doing it, I think that means it's good. So with whole life, you have the guarantees that the clients are looking for. As I said, it's a 4% guaranteed gross rate. It comes out to overall net in the long run. It takes a few years, but you get to about 3% net down the road. So still very strong in particular in this market, but it's really not about the rate of return. It's about everything else that it's doing for you and everything else that capital allows you to do and take advantage of. So you have the guaranteed growth, you have the flexibility. We have clients who send in an application, and then with that application, they have a loan request. And then as soon as the funds settle in the policy, we send the loan money out. So that's how flexible we are in that. No waiting period, no nothing. The money's there, you can have access to it. With the collateralization strategy, you don't interrupt the compounding. So a client takes a loan from our general funds. It doesn't come out of your policy. It comes out of our general funds. The money stays in the policy, continues to grow. The carrier, us, records a lien on the cash value. And then as the loan is paid off, the lien is released on the cash value. And then it's there for the client to use again immediately for something else. So, as it goes along, they are growing their cash value with each payment that they make. The gains are tax deferred. So, you don't have this 1099 getting sent to you every year, and they can be accessed tax free if you do it properly. And, our needs are different when we're building our wealth and getting ready for retirement at age 40, 45, 50 than they are when we're 60, 65 when we retire. And now when you are 60, 65, somewhere in that range, and you're getting ready to retire or retired, you have a powerful asset to buffer your retirement, even bridge your gap to retirement. Because some clients may want to retire before they qualify for the best opportunity to get the most payout from Social Security. You have this asset you could take from or borrow against or withdraw from to bridge that gap, help you bridge that gap, and then delay your taking your Social Security and get a higher Social Security payout. Even in retirement, when Social Security isn't going to be covering everything that you need to survive, and maybe some of your other assets are a little more volatile, like say the stock market or the bond market or housing, real estate, those higher risk assets can go through periods where they have a severe downturn. So when you are living in retirement and taking distributions from those assets, it's really is it really a good idea to take your distribution from an asset that has just been cut in half and lost asset value, like in 2008 with the stock market? Let's let that asset grow, come back, and recover, because you don't want to take distributions from a depressed asset. It's just going to make it even harder for it to get back to where it was. Instead, take a strategic distribution from your whole life insurance policy, which is growing no matter what's going on in any other market. It's guaranteed to grow. You had paid your premium. We keep our promises, our guarantees, and that money is there for them, and you know it's going to be there, and you know it's going to keep growing every single year. And so, take the money from this other asset. That's what I mean when I say, whole life insurance makes everything you do work better, because it gives those other assets time to regroup and grow back to where they were, because they just by their nature are more volatile. And so that's just another advantage that you have to make sure that what you want to happen will happen, and that everything you're using outside of the whole life policy works even better. You have that liquidity, access, and control. I already said that. So, and then you also have that immediate income tax-free death benefit for your children or grandchildren in case that you're not around to achieve the goals that you wanted to achieve. They're still going to happen because you have this infinite banking concept policy in place. So there's no additional fees, no red tape. You have, as I said before, quick access to the funds. We say 10 days or less. It really comes down to how quickly the banks can process those checks and get the funds in there. So what do you tend to look for when you're looking for clients? Really, I mean, almost everybody. If you have a household income of 70,000 plus, you're an infinite banking concept prospect. And a lot of times when you have debt, that's also a great prospect as well. But in general, small business owners really like this. Real estate investors love it. They really get it. Doctors, dentists, professionals. We had a dentist who, this is an older story, but I like it. A young dentist took over his father's practice, and he was working on updating the office. And we set him up with an infinite banking concept policy. And he used loans against the policy to revamp the office. Well, he also had clients during the 2008 downturn who weren't coming in for their procedures. They couldn't afford it. And he had a company he could use to finance those, but he decided he could do it himself. So he could take loans at 5%, 4.76% from mutual trust against his policy, and then finance his clients' procedures. And he could charge them the same or a higher rate. And so he not only got, clients in the seats, he also made a little money in interest from the loans. And these are, small family business. He knew these people, so he trusted them. And so, that's just one idea of an infinite number of ways that you can use the infinite banking concept policy with no hassle. You fill out a one-page form, boom, you get your money. It's if you've gotten a loan from a bank for, like I said, a home equity loan or anything like that, all the crazy repeated docs you have to send in to get it. I know very well. So this is easy. It's one page, you send it in, it's guaranteed loan. You don't have to qualify for it. It doesn't show up on a credit report. You pay it back whenever you want. So he was able to use that to really keep his business going and growing. So clients who also are just seeking liquidity and control of their money, they just don't want to hassle with the hassle of having to work to get liquidity to money. Clients looking for safe asset alternatives. So whole life insurance is an asset class by itself, and it has a lot of unique properties because we use that actuarial science. We use actuarial science to spread risk out over generations, and so that's why whole life insurance is such a unique product and such a powerful product. They need to be insurable. We are dealing with life insurance here, so they do need to be insurable. And many times they have a desire to protect their family, and of course, most of us have a desire to protect our family. So those are our clients. Just to hit home a couple of a few of the features here: the guaranteed premiums. So guaranteed premiums and guaranteed cash values, and especially high early cash values. Our Horizon Value flagship product has the highest early guaranteed cash values in the industry, bar none. And when I say bar none, I'm talking about the first 6 to 7 years, roughly, depending on who you're looking at. But we have the highest early guaranteed cash values, and you can get to them very easily. We have a very flexible paid-up additions rider. And so for a little more on that, the paid-up additions rider, for those of you who are not familiar, is like a single premium whole life product. Right? It's very cash rich. Now, by itself, it's a modified endowment contract. So when you bundle it together with a base policy, you have to keep that in mind and be careful how much you fund it, because if you fund it too much, bundled with a base policy, you have a modified endowment contract. So we push it right up to the limit. That's why I said earlier, 60% going to that paid up additions rider is pretty standard. to not mech the policy. You add a term rider on there, and you can buy some additional cheap room to add even more, 70, 80% into the paid up additions rider without meching by using a term rider. But again, 60/40 is the typical. We have our single paid up additions rider that you can put up to $500,000 into, and that's on a one-time basis. And then you have the flexible paid up additions rider you can contribute to annually for up to $100,000. And now we have, I would say, the most flexible PUA rider in the industry. Your minimum is $100 a year, and that's not a fee, that's premium that goes in. So when you pay $100 toward the PUA rider, about $94 immediately shows up in the cash value. It's a 6% load on there. So that's among the lowest in the industry as well. No one's lower that we have seen. $94 shows up immediately in the cash value. It starts earning 4% guaranteed interest. So at the end of the year, you have $96, and then plus you're earning dividends on top of that. So it's very cash rich, grows quickly, and really is a key part of getting going quickly on the infinite banking concept. You can do it without a paid up additions rider, but it's going to take time. And our clients don't want to wait. They want to get going now. And so we can design it so that they can get going right away. Sometimes you can have a little bit of funds. The client have a little bit of funds sitting in a savings account, or maybe in an IUL they underfunded for too long and it's dying. We can use those funds to jumpstart the infinite banking concept as well. Excuse me. So policy loans provisions, the most flexible in the industry. You can take a loan anytime, as often as you wish, and again, no restrictions on when you start taking those loans. You have added riders that you can put on to either earn a little additional premium for income for you, and obviously help your clients as well. So the waiver premium rider is available on the base policy. The disability benefit rider is available on the PUA rider. So what that means is if the client is unable to do their own occupation for 2 or 5 years, depending on which provision or which version of that waiver you purchased, then Mutual Trust pays your premium. And this is not a waiver of deduction. Like some policies, it doesn't just stop expenses coming out. It's actually paying the premium as if the client's paying the premium, and the cash value continues to grow and earn 4% and dividends, as if the client is paying the premium themselves. The really powerful thing here is on the disability benefit rider, it covers the premium on the paid up additions rider for up to $15,000. So let's say, for example, your client is paying $10,000 total in premium. $4,000 is going to the base. That's going to be covered by the waiver of premium on the base. $6,000 is going to the paid up additions rider. That's going to be covered by the disability benefit rider. And Mutual Trust pays all of that. The client isn't able to work. Now, if they are only paying $100, the minimum, into that paid up additions rider, even though they're able to pay up to $6,000, but they're not, they had a bad year at work. They didn't get their bonus. Sales are down, whatever the case may be. They're paying the minimum. And then they go on to the disability rider. Mutual Trust will pay the full $6,000 into the PUA rider. So think about how powerful that is. Even if you're unable to work, this portion of your retirement supplement, your retirement plan, will be fully funded. So that's pretty cool. We also have the accelerated death benefit. And terminal illness is pretty typical. Chronic illness is a little newer. These linked benefits are becoming much more popular. The chronic illness rider is issued on all of our cases, rated table 4 or better, and that's better than the industry standard of standard. So this allows the client to accelerate the death benefit anywhere from 5% up to 24% on up to $1 million total each year until the policy is depleted down to $10,000 and then it's reduced paid up. So that means the client just has to be certified by their own doctors being unable to do 2 of the ADLs or suffer severe cognitive impairment, and then we give them the money. That's it. That's all they need to do. They don't need to show us receipts or anything like that. And since it's under this benefit is underwritten for mortality and not morbidity, it means that if they don't qualify for a long-term care rider, they may still qualify for our chronic illness benefit. So it could be a great alternative. It's not a replacement for long-term care, but it could be a good fallback, and it's definitely a great additional benefit for no additional premium. We have a dedicated IBC concept coordinator. His name is Richard Weiserick. He's also our business planning coordinator. He's a real wealth of knowledge and a great resource, and you have access to him. We also have a law firm that we have in Atlanta, Doug Friedman. You have access to him for more complex estate planning issues, state tax issues, things like that. You have access to him for free if you're working on an MTL case. We provide training programs at IBC. We have marketing materials that you can use, and I can share those with you and Tony to send out to you. And we have a module in our IBC software that you can illustrate loans or have us illustrate the loans for you, repeat loans, and how that how that works. And you can show the client different scenarios for payments. These policies can be built. We have such flexibility in the Horizon Value design. You could design a policy that's paid up in two payments, guaranteed, and then just use the cash value from there. So extreme flexibility in the design and the use, obviously. Excuse me. So hopefully you can identify a couple clients who fit the profile and give Tony a call, and we can start working on a case. Try it once. We have maybe our top 10 producers, 8 are infinite banking concept. Excuse me, dry throat. Infinite banking concept practitioners. So I encourage you to try this. The cases are such that it doesn't take a whole lot to move the needle on them. So I encourage you to give this a shot. And Tony, I don't have my summit slide, but we just changed our summit destination. I encourage you, if you haven't signed up with Mutual Trust through IAMS, we will double your credit towards convention. So it makes it very, very reasonable to qualify for the convention in your first year. If you hit the ground running in your first 4 months, we're doubling that credit for you. And we moved our destination to Montage, Utah. Beautiful place. We're going there next June. The qualification period, now there's still 6 months left, so you still have time. So I encourage you to take advantage of that and many other benefits that we have that I don't have time to go into right now. So Tony, I'm happy to take any questions.
All right. Can you hear me okay?
Yes, I can.
All right. Let me switch this back over to me. All right. So I do have some questions here that we're going to go through. Here I've got somebody here that said that they do have a prospect looking for single pay whole life MEC, which we can utilize Mutual Trust for this, correct?
Absolutely. We have a very competitive single premium. It's called Horizon Legacy. And we revamped it, and surprisingly, to comply with previous rule changes, and it came out looking better than ever. So it's become quite popular. Yes, we have a great option for that.
Another question I have here says, what is the ideal age for this product?
So typically we're looking at individuals in their 40s, maybe 50s. You start to get older, and the cost of insurance can start to be an issue. 40s, 50s, even 60s, though, you're good. Yeah, that's a good range.
Okay. And then I've got one, bear with me, I got to scroll through this one. It's a little bit lengthy. Okay, so they're saying, I'm not sure if I understand. If there's a prospect with the 5-year goal, how do they get ahead versus just their savings account? Aren't they sacrificing about 50% of their liquidity?
I'm not sure where the 50% liquidity sacrifice is coming in. So when you take a loan against the cash value, you're not limited to 50% of what's in there. You can take 95% as a loan. But the key is, this isn't money that they're going to be using every day or withdrawing every day for, to pay their expenses for their monthly bills. These are funds that they're saving up. And so the money is being left in there, essentially, in their policy. And they're taking loans against the cash value to efficiently finance large purchases. So that's what this strategy is about. I hope that helps.
Okay. I have another question here that I can answer. This question was in regards to if there will be a recording of this available, and yes, there will be. So once that is available, I will get that out to those that need it. So, and the next one is, does the MEC affect a loan taken from the policy?
Yes, it does. So whether you withdraw money from a MEX policy or loan money from a MEX policy, it will be taxed if there is gain, and there will be tax on the gain. So that's why it's important that in this strategy, in particular, that we do not MEX the policy.
And I think we've answered this one already. Do you write single pay? And that would be yes. That would be the legacy plan, correct?
Correct.
All right. Next one, as we're flying through these bad boys, okay, do you offer premium deposit fund to avoid the MEC on a single whole life?
We do not.
Now, was there a time that you guys did? Because I had that question asked earlier this week, actually.
We did.
Case that I was
We
working
used
on.
to. We used to. It may still be available for a all base policy, but they had some issues with the PUA using it for the PUA rider. So my safe answer is basically we do not have one.
Okay. Who do I need to get in touch with to get an illustration? The answer to that question would be me. If you can see on the screen here, we have 3 life sales directors, myself, and my email here is tony@iamsinc.com. And then we also have 2 other life sales directors in our Topeka office. That's Justin Ford. His email is justin@iamsinc.com. And then we also have Jess Riley, and his email is Jess with an E. It looks like Jesse, but it's pronounced Jess, and he's available as well. Anytime that you do have a quote request, you can actually either go to our website and submit that live quote request online, or you can either email one of us or reach out to us, give us a call, so we can obtain all the necessary information to get an illustration for you. All right, let me see here. I got someone that's looking for the material. I'll make sure I get that out to you. Oh, here's a good one for you. When will there be online applications?
Oh gosh, we want them so bad.
Yeah.
It's coming. So August or September, somewhere in that area. And so I think I'm pretty safe in saying by September we will have it. And
Okay.
definitely we all want this so bad. So yes, September.
All right. Got a scenario for you, and I think this will be the last one here.
Okay.
Say a person's 50 years of age. What is the average deposit into this type of program? So I gotta scroll through it. Hang on, not done
Sure.
yet. Still
Okay.
scrolling through the question. I got a little window to read this on. Okay, say a person's 50 years of age. What is the average deposit into this type of program that would make it feasible to start? And what type of program? Wait a minute. And when would it be advisable to start taking out the account? So I'm assuming they're asking, how would you design it? I guess in the best way to say
Yeah.
where there would be time to take funds, and when would be a good time to take funds.
Sure. So typically what you will have is you will have a client who the average premium for this type of concept is about $8,000 annual. And then they might have a little bit of money in a savings account to dump in as well as a single lump sum dump in. Not can be too much, you'll mess it up. But so you take that, and then what you can do is we have a program, and I will send this over to Tony. I've shared it with him before, and we've shared it with IAMS before. A sales development strategy, a selling system that we partner with that helps you utilize the infinite banking concept to pay off debt. They can pay off all your debt. You can pay off all your debt in 7 to 9 years or less, including your mortgage, without paying another dime than you're already paying. And so I will share that with Tony to send out. But you can start using it right away. And what you can do is start paying off your debts. If debt elimination is your focus, you start paying off the smaller debts as soon as you fund the policy. And then the cash value builds, you pay off debt, small debt, and work toward the bigger debt, and it all builds together, and you can get out of debt very quickly. And it works. It's based on all the guarantees. They don't even include the dividends in their calculations, just to make it even more reassuring. And so it's a strategy you can get up and running pretty quickly. But yeah, 8,000 is the average, plus maybe a little bit of money from a savings account or something like that. If you have an IUL that's dying, 1035ing that money in is fantastic, because you can really put a lot of that money in because it's tested and doesn't met your policy typically. So, but yeah, long story short, $8,000 is your typical design, and you can get going immediately.
Okay. All right. Well, with that, got a couple other polling questions wanted to provide for everybody. It could be kind of a nice segue because you mentioned this before. So if you would like more information on the topic that we discussed today, I do have a polling question that I just launched. If you could respond to that, I'll make sure to get that information out to you as soon as possible. So I'll leave this up for a little bit while everybody responds, because I see that quite a few of you are looking for more information, which is always great. All right, I see that we're done there. So I'll go ahead and close that out. And then lastly, if you're not appointed with Mutual Trust Life and looking to get appointed, please respond to that polling question that I have up, and make sure to get you taken care of on that end as well. Well, Kip, you'll be happy to hear that I got quite a few people that are looking to get appointed, as well as more information.
Fantastic.
Okay, I'm going to go ahead and close that out. All right, Kip, any final words?
Just thanks again for having me. I hope that this was useful for you. This is a very powerful concept, and it has changed people's lives. We have clients crying in their advisor's office because they can get out of debt with this concept, and they can see it. And so I encourage you to take a look at whether you have used whole life in your practice in the past, or this is all new to you. I encourage you to add it in, because whole life is a third of the market. So, why not fish in the whole pond? So you can. This is a great way to tell a different story and find that organic growth that we're all looking for. So, thanks again, everybody. I appreciate your time, and happy selling.
Okay, and with that, I will say that from a personal perspective, I work with quite a few agents. A couple I can come to mind that actually write a lot of whole life with Mutual Trust, and one of which does utilize infinite banking concept, and he's very successful in doing that. So there's definitely a market there for some of your clients, maybe not all of your clients, but I'm sure you can find some clients out there that this would be a nice solution to their needs. And for this content and other content that we have available, as always, you can follow us or like us on LinkedIn or Facebook, as you can see here. And with that, I want to thank you guys again for joining us on the webinar. Apologies again for the late start and the technical difficulties, but I think we kind of braved through that. So you guys have a great weekend, and look forward to speaking with you again. Thanks, everyone. Have a great day.